How would you like to get a big tax deduction when you throw out the trash? Sounds pretty good, right? One of my clients recently redid their parking lot. It was in pretty bad shape, so they didn't just resurface it, they actually had all the pavement scraped off down to the dirt and had it hauled away. And then they put in entirely new paving along with modern drainage and wiring for their lighting. And that was part of a larger renovation effort, and altogether their cash for trash tax benefit last year was $2 million. That's $2 million they could use right away rather than wait for it to dribble in slowly via straight line depreciation over almost 39 years. So how do building owners get a cash for trash tax deduction? The answer is to use new tax rules that created this option. The IRS recently changed some regulations so you can write off retired building components that you end up trashing when you remodel or renovate, if those building components still have cost basis in them. And more on that in a moment, but first a little background. Now, if you've watched my video, How to Save Taxes by Decapitalizing Your Building, you heard me talk about the new IRS regulations that radically changed tax accounting for real estate beginning in 2014. Now, one change was to create a clear method for tax accountants to deal with the situation that arises when part of the building is removed, such as demolishing walls, throwing out an old boiler, or old windows or doors, anything that's being replaced. So, the historical accounting cost of those kinds of items is real, but it's usually buried within the building cost in a single line item, or at best a few line items, with no good way to determine the individual cost of an individual item like a wall, a boiler, or a window. So when replacements are added to a building, the accountants usually leave the cost of the old thrown away assets on the books, and those become ghost assets, still being slowly depreciated but no longer present in the building. Before the regulations changed, there was no good method to take an abandonment expense for retired assets like those. But now there is. The IRS prescribed a new method to accomplish that, and property owners are encouraged to use it. But there's still a problem. In many cases, the accountants will not be able to determine a reasonable separate cost to assign to the items that are being trashed, again, because they're part of the building, and there's no information to cost them out as separate items. Now, the solution could be to have an engineering-based cost segregation study performed on the building. That would not only allow you to accelerate your depreciation deductions, but it also would help support any cash for trash deductions. But don't take my word for it. Here's what the IRS said about it in a September 2016 publication about the new regulations. Cost segregation studies now serve additional purposes. For example, not only do these studies reclassify a building's components into assets with shorter class lives, but they also identify building systems for the purposes of applying the improvement rules. Now, by making this statement, the IRS is confirming that the cost segregation study is more valuable than ever. A properly prepared study can supply the data that the IRS will accept to document the initial cost of building components that have been retired before the end of their depreciation life. With that data, all your accountant needs to do is calculate the accumulated depreciation on those retired building components and subtract it from the initial cost to arrive at a remaining or undepreciated cost. And that undepreciated cost then can be taken as a deduction, giving the property owner, in effect, cash for trash. Now, one word of warning, this type of deduction must be taken in the year that you throw out the trash. So from now on, whenever you engage in any significant demolition and removal of building components, talk with your accountant. Did you throw out any potentially valuable trash this year? If so, I invite you or your accountant to contact me and see if that activity warrants an engineering-based study to qualify you for your cash for trash deduction.